Today I'm going to teach you a contrarian strategy. You want to learn step by step how to trade against the crowd because you don't want to go with the crowd because they're going to take you right off a cliff. Let's get started and jump into contrarian trading strategy. So the first thing I want to say about being a contrarian is a lot of the best traders ever have been contrarian. Warren Buffett. We all know who Warren Buffett is. If you don't, look him up. He's probably the most successful trader. A recent guy, Keith Gill from Wall Street Bets, they're famous for their meme stocks. They turned a $53,000 bet on GameStop and turned it into near $50 million. Not bad. Pretty good risk to reward ratio there. George Soros, who shorted the yen and the pound, he was able to net $2 billion in trading profits. Really awesome. And there's a famous quote by Baron Rothschild. If you're a contrarian or if you are a conspiracy theorist, you will know who he is. For you conspiracy people out there, he said, the time to buy is when there's blood in the streets, which means when things are crazy, when everyone's panicking, you want to be the guy that's smart and knows how to get into the trade. I am a contrarian. I want to get in when everybody else is getting out, right? That's just what I want to do. So let's talk a little bit about some contrarians. By nature, traders are contrarian. This is a picture from one of my favorite movies, Cool Hand Luke. If you're not an old guy like me, if you're young and you're watching this, go watch the movie. It's really good. Luke is this guy who can't follow rules, right? And he's always got a smart aleck remark. And no matter how hard he tries, he can't follow the rules. And he ends up talking smack in prison. It's a prison movie. He is talking smack in prison. And the guy in the left there, his name's Dragline. And Dragline was like, dude, you're just a little punk. Stop talking smack, right? But Luke just couldn't do it. He had to talk smack. And so he gets into this big fight with Luke, and they're going at it. But he's a big dude. That guy's name's Dragline. Dragline's a big dude, and he's just tearing Luke up. But Luke kept getting back up. Luke would get knocked down, he'd get up. He'd get knocked down, he'd get up. He'd get knocked down, he'd get up. And finally, in the end, Dragline ended up carrying him out and set him onto his bunk. And he's still fighting, right? And that's how traders are, right? In order to learn to be successful, we get beat up a little bit. And we have to get back into the ring and get back in and get back in. And we're kind of contrarians by nature because most people don't want to get beat up and punched in the face 1,000 times. But traders, we seem to think that that's a good thing. And, most of us who trade really wouldn't be trading if we were like everybody else. We're just a little bit different, And so we're contrarian, which means we don't always go with the crowd. I know me personally, I just can't help it. It's just part of who I am. I have to do things a little bit different than everybody else. So contrarian investing is pretty simple. You just go against the trend. That means when other people are buying, and that means you're selling. When other people are selling, you're buying. Again, Warren Buffett's been great at it. Other really famous traders have been really good at it. And contrarians think a little bit different than others do. They don't trade based on fear and greed like many traders hoping to get rich quick do. So the opposite of a contrarian would be someone who goes with the flow and trades. Everyone says the trend is your friend, the trend is your friend. And that's great. It's your friend until it's not. But the big money is made on market turns. When the market turns, that's how those guys at Wall Street Bets did it. That's how George Soros did it. It's when the market turns, that's where the big money is. And of course, it can be challenging. It can be really hard. But I'm going to teach you a strategy on how to do that without the big risk. So again, it really believes, when everyone believes that something's going to happen, that's when you need to be very aware of a contrarian trade. Let me give you an example. If you're in the grocery store and you're buying your groceries and there's like a 16-year-old teenage girl checking you out and she says, hey, did you buy any Bitcoin? It's going crazy right now. Well, when that happens, you might want to think about getting out or going the opposite direction. Because when the common person knows, when the average person is in on it, it's too late. It's when everybody's already on it. It's like, okay, this thing's a done deal. When people start jumping in on it, it's too late. Okay? And so that's what contrarians do. We try to find when it turns, when the market tide is overbought and everybody goes. That's when we get in. And so it works great on stocks and cryptos and Forex. It doesn't matter what you're trading, it works great. And so what I'm going to teach you is a simple strategy. No indicators, no training, just price action. The only thing you're going to need is some squiggly lines. Can you do some squiggly lines? And hopefully they're not too squiggly. Hopefully they're straight. All you really need is the line tool, and you'll be good to go. And so I'm going to be teaching it on the daily. You can do this on any time frame because the market is fractal. The market is fractal, which means the daily, the 1 hour, the 4 hour, the 5 hour, all of the technical analysis will work on any time frame. And so the strategy will work on a 1 minute time frame. But I'm teaching it on a daily. Okay? Now, so rule number 1, you want to find something that's been going down for a long time. In this example, we're looking at PayPal. PayPal's been going down. A great way to search for this would be to search for using a screening tool. You can look at it on Yahoo Finance, on Bar Chart, or TradingView, and FinViz. All of those have some good screening tools. I'm not going to get in on how to do that on this video, but you're looking for something that has gone down for a long time. So if you can see here on this chart, this has made a very steady down move, right? So that's what we're looking for. Step 1, something that's really moving. Or if you're looking for a buy trade or sell trade, you're looking for that. Right? You're just looking for constant movement. Now, next, you want to draw a trend line and be patient. Let me circle the be patient part. Drawing a trend line is easy, but being patient is hard, right? Being patient is really hard. So let's remember that throughout the course of this video, that you want to be patient. Patience, 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 my friend, will help you avoid the bad trades. Let's learn to be patient. Now, so once you draw the trend line, you're going to then go to next step. Step 3, you're going to now look for a special thing called consolidation. So you can see you want to look for price to break out, but then you want it to go sideways. So step 3 is to break the trend line. Okay? And I got ahead of myself. Step 4, wait for a sideways movement. See, I wasn't patient. I got ahead of myself. Step 4 is wait for sideways movement. Once the market starts going sideways, it consolidates. Sometimes you'll get what they call a V pattern, which means it hits the bottom and it goes back up. But most of the time, we're going to get consolidation, and that's what we're looking for. We're looking for consolidation. You want to get consolidation before you enter the trade, and it will help you avoid losing trades. I'm going to give that as a bonus tip at the end on how to avoid losing. Now, rule number 5 is when the sideways move breaks, it's over. So here's what we do, right? I'm going to zoom in on this. When the sideways move happens, what you do is you get the break. So you're like, okay, it broke the trend line. Step 1. Now I'm looking for consolidation. Step 2. Now that the consolidation happens, I just draw a trend line, right? Or not a trend line, a horizontal line. When it breaks above the horizontal line, that's when I put my buy in place. And so this will help you avoid losing trades. I'm going to tell you about that in a minute. But right now, this is an actual example. As it's PayPal. Right now, we're just watching this. We're not in this trade. We're watching it. And if it breaks out, we're going to go. If you watch my channel, when I take it, I might talk about that. Now, so that's what we're looking at. We're looking at PayPal, but I'm looking for a break right here. And I will probably look at it on a weekly time frame as well. This is a daily chart. All right. Now, once you do that, you want to place your stop loss at the bottom of the channel. That is a great way to do it. And then you want to target like a 2-to-1 risk to reward ratio. So this is your stop loss, and you want to maybe target up here, 2-to-1. So your stop loss is right here, and your target would be up here. And I think I'm getting ahead of myself again because I'm going to talk about targets in the next slide. Yeah, so you want to take profit. When it's up 10%, you want to move it to break even. That'll help you with your winning percentage. And then you want to try to get a 2-to-1 risk to reward ratio. So if you're risking $10, you want to try to get 20, right? Just plain and simple 2-to-1 risk to reward ratio. If you want to learn about how that risk to reward ratio is, I have another video on that. It'll be coming out very soon. Now, there's always exceptions to the rules. You want to make sure that the market is doing what it's supposed to be doing, and you wait for the market to come to you. And if, one of the examples I would use is Tesla, right? Like sometimes I will give Tesla a little more room because it's very volatile and it's been in such a big bull trend. I don't want to go against it because of that. And so Tesla is one that I like to be very careful about, even though it's how I had my biggest win this year or last year was in Tesla. So sometimes you want to add some exceptions, but you always want to manage your risk. All right, so here's a great contrarian example. This is the Australian Canadian. It works good on stocks and crypto. Let's go ahead and show you what we're looking at here, how very simple this is. You draw the trend line. Then once at that, you get sideways moves. So now go ahead and draw this, okay? And actually, if you drew this here, the first entry would have been here, right? And then it's still consolidated, but you would have been fine. You just would have had to been the P word, patient, which, if you're not patient, you can always get out and get back in. But then there was another entry right here, and then that one was the one that really went. So you could have taken one trade, held it a little bit, then when you saw this next candle, added a little bit more, and then you would have made even more money on it. But remember, it's not about how much you make, it's about keeping your risk under control. We are always, always, always focused on keeping our risk under control. It's really important. If you want to trade long-term, you got to learn that. You have to learn how to keep your risk under control. All right, now, does this work for options trading? The answer is yes. Does it work for Forex trading? The answer is yes. You just do the same thing, but instead of buying the stock, you buy options. Now, I want to dive into what happened recently in crude oil, and this happened here in April now of 2020, April of 2020, and this is a daily chart. But the thing that I want you to really take away from this is that we had a huge move to the downside. Right, a huge move. And then this is when COVID hit. You see that big gap. It was already a little bit bearish, but then we get a big move. And we had a trend line drawn. But I want to show you, this is a bonus tip. This is a bonus tip. When the market is trending down, it moves like this. Okay? Now, if you draw a trend line and you take the trade on the break, you've got this little tiny trade. And sometimes you'll take it right here, and as soon as you take the trade, it goes to the next level. You get the trend line break, you got this little tiny, and then it goes to the next level, and then it's a huge one, right? And so that's how traders can really get stuck, okay? That's why waiting for consolidation is so important. So in this specific example, yes, it broke the trend line here. It broke it, but guess what? The consolidation didn't break. So we get consolidation. What do? We draw a line here. Now I'm right here and I'm looking at the chart and I'm like, oh, I'm not trading this till this breaks. Well, guess what? It went up and touched it and dropped huge. It dropped huge. But guess what? That saved me. I did not buy this trade. It kept me from losing. It saved me a big old L. And if you can avoid losing, every time you avoid losing, that makes you a better trader long term. And so this waiting and being patient for that consolidation is critical. Now, if we go down, now what happened? It did it again. We get a trend line break, we get consolidation, and then we get the break. Another thing you can look for is a W pattern, right? Let's take a look. You see the W touch, down touch, a W pattern, but sometimes a W pattern will go like and turn into like a good type pattern. It'll keep going. Okay, and so you want to watch that. This is crude oil. But then if you would have drawn your line here, you got in here, your stop loss is here, here's your buy, here's your SL, and look, this is your stop loss, that big. What's your win? What is that? That's like a 5-to-1. A 5-to-1. If you can do 5-to-1, you're going to do really well, guys. You're going to do really well. All right, now, I want to zoom out on a weekly chart on this same thing, and just to show you how big this trade could have been. Like one contract on this was insane. Everyone was panicking down here. I'm getting behind the scenes. Everyone's panicking like, oh my goodness, oil's going extinct. Energy is going to zero. We're all going to live free energy. People are they're losing their heads. When they start to panic, they're not thinking clearly. So one way of a contrarian is someone that thinks clearly when everything else is going crazy. And so had you been thinking about this and you take your entry here on this, your stop loss here. Look at what this did. This was April of 2020. Look at this. This is a monster move. A monster. That's what's possible with contrarian trading. It's catching monster moves. And here's the thing. This is really important. Remember in the last slide I talked about saving you the losing trade? But here's what a lot of contrarian traders do, and some of them get rich and some of them get broke. But if you follow the strategy where you're going to be patient, like I mentioned, and wait for the consolidation and the break, you're not afraid that you're going to miss. You see this is a V pattern? That doesn't happen a lot. This is a weekly time frame, okay? So this is actually 2 weeks of trading. So we get time for the consolidation to form. You don't have to panic. You're not going to miss it. And even if you do, you catch a pullback and get in on a lower time frame. You're not going to miss this. So you don't need to get in early. You wait and you're patient, because here's what happens. You know, when you're trading futures or Forex, you're trading on margin. And so you get in here because you think it's going down. You think it's going to reverse. You get in, you get in, you get in, you get in. And now you have all these positions and you're like, oh yeah, baby. You're licking your lips. You're rubbing your hands together. You're like, this thing is going to be huge. Well, guess what? There's that one last spike. And that thing, boom, you just margined your account. You now took your $50,000 account and now it's worth a big old zero, right? And now you're an emotional wreck. You just lost everything because you're thinking that you're a brilliant contrarian trader. Well, guess what? You are a brilliant contrarian trader, but you didn't manage your risk properly. Okay? So now that you got that under control, if you follow my strategy, you don't have to worry about trying to time it, because you wait for the consolidation and you nail it. And if you lose, no big deal, because it's a small loss. But if you win, you can win big. Imagine winning that big with that much of a loss, right? If you do it and you're patient, you know, we talk about math, which I don't like to talk about math because I'm not good at math, but math tells you that if you win little or if you lose little and you win big, you're going to be a good trader, right? And so just think about that a little bit when you're watching this video to help you really understand how this strategy works and how to time it so you're doing well. All right, now this is a trade that I'm currently in where it just happened. Okay, this is legit real. Okay, so here we go. We got the entry. Because why? There's consolidation. Now, you can see we got the trend line. Look at this big old downtrend, man. Big old downtrend. Boom. This thing's huge. We got a channel here, right? It's pushing at the top of the channel. If it breaks out of this channel, it might even keep going. I don't know. I was just listening to an analyst today. He said he thinks it's going to keep going down, whatever, blah, 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 blah. I'm an analyst. I know what I'm talking about. It doesn't really matter to me because this was consolidation and I was patient. I did the big P, patient, right? Normally, I have had problems with that. I'm contrarian. I don't like to follow rules and I don't like to be patient. But look, here we go. Right there on the break. And this is a solid textbook contrarian trade. You can use the MACD too. I said no MACD. You can use it to help you because look, it's a cross here. So that was kind of helping me. But I just saw this consolidation and I'm like, okay, when this breaks, I'm going for it. And I did. And it's not going to win every time, but look at my risk to reward here. See that? And I'm already at the point where I'm going to lock my stop in here. But this, if you just do this, you're going to do really well. because math says that it's impossible to fail if you do it right. I'm not saying trading's easy. I'm not saying you're guaranteed to succeed, but I am saying that math says that if you manage your risk properly, you will be guaranteed to succeed. If you hit $2 on your winners and you hit $1 on your losers and you win at 50%, the math says that you can't lose money. Okay? So, I don't know. Trading is risky. I'm not telling you what to do. Do your own homework, but math doesn't lie. 2 plus 2 does not equal 5. Okay. All right. So that is some really solid stuff, and I hope this strategy helps you. Let me know in the comments if you enjoyed it. Let me know if you learned anything. Let me know if you got anything of value out of it. Let me know if you thought it was horrible. But just go ahead, and if you did like it, I'd just be so thankful if you could subscribe and like the video and share it with a friend, because we want to help people be successful. That's why we do what we do. So again, thank you, and we'll see you guys in the next video.